What's up, everyone? This is Marcus at TradeSmith, and I'm going to show you a new program that I joined called Warrior Trading Pro, and that is a program that I am in. Been doing for 6 weeks, and I'm going to show you exactly what I plan to do with this small account challenge. So, all right, today is an example of what not to do when you trade. So today I lost really big. I noticed that at the beginning the market was slumped, and I should have just said, look, there's no trade today. I'm not going to trade. I'm going to focus on looking for some swing trades. But today I took a major hit, and you can see $1,400 and fees. So all the profit that I've been making, I'm basically giving it back to the market on this small account challenge. Some of the things that I did that was completely uncharacteristic of me was trying to force a trade. One, wasn't waiting for the 5-minute setup. That's number two. Then I was able to trade and had a small win, and then I forced it again to try to reach a certain target on my account. Now, you all know that I've been trying to get the $2,500 limit on my small account. Started getting desperate because I noticed that every time I get close to it, I had to pay my fees for my broker, and my fees kept me underneath it. So I wanted to do a trade just to get me over the hump. And I was in a pretty good setup, but the problem is I held on to it too long, and I should have let it go. I should have cut it loose even when it was at $100 and a loss. So instead, I tried to double down, and eventually I lost my shirt. So I want to walk through this trade and show you how not to trade. First trade today was a trade that was uncharacteristic trade of mine, trying to trade something coming out of the halt, which was a new trade. Even though I barely got out of this trade up, it was a pretty rocky trade. First trade of the day is me trying to trade something out of a halt, which is something that I never do. It was a trade that was pretty risky, and it kind of built me up for the rest of the day. So I got into ZCMD, saw that it came out of the halt, dipped down, and then it began to work its way back up. But if you notice that I'm in this trade, not taking profit, letting it go down, and then hoping that it comes back up. So that was the first earmark of the day that kind of should have showed me how my trading day is going to go. This trade, I actually looked away and came back to my monitor and noticed that I was down almost $350. That should have been an earmark for the whole day, where I noticed that it was still in a uptick, but I held on to it and focused on just skimming whatever I can out of it. So I took my profit there. I realized that what only took a minute, it seemed like in your mind could be 5 or 10 minutes. So I was in that trade pretty long, longer than I should have. I should resolve. If it doesn't resolve, I should be out. I shouldn't be holding on for desperation. Second trade of the day was SSNT, which is where I began to start spiraling. I was hoping that it curled back up, held on to it too long, and eventually lost whatever little bit that I was possibly able to make. Held on to the trade too long again and did not take my profit. Notice that it flushed, went under $100 in a matter of 2 seconds. Second earmark of the day is me still holding on to it, and I noticed that at this point I need to quit. This is the point where I noticed that I probably spiraled out of control for the day, where I didn't see it, but I didn't. Now that I'm looking at the tape, I'm realizing this. All right, and eventually I cut it loose with the $180 loss on that one, and I noticed that that was the pattern that I begin to set for the day. Anytime I move into that direction, I should really step away and walk away from the screen and then come back and then begin to trade. I was noticing that I was under my daily limit, so I felt that I can still keep moving. All right, entering into my third trade of the day. This is where I got into DPHC. I did want to start with a small 300 share position. This one, I began to notice that I was on the wrong side of the trade again, and eventually doubled down, which is the next thing that I noticed that I should not have done. It increases your commission fees, as well as it makes your potential risks higher. Even though I doubled down and I was able to get out of this trade with a positive amount, I noticed that for my last trade, it set me up for the worst activity ever. And you can see that I doubled down there, which is a very bad habit if you're on the wrong side of a trade, thinking that I can average it out. Toggled with this trade for a long time and waited until it actually broke a certain mark. I was looking at level 2 at the 1475 mark and noticed that they were getting eaten up, and I noticed that I was going to be able to have a profit on this trade. However, the aggressive behavior on this trade set me up for the biggest loss that I've had ever, but not alone. It's on my small account challenge. Could have closed out of that one early, but I noticed that I end up giving most of that back as well, which I think that's what tipped me off to say that I need to really do a big position. And I don't know why, but at this point, I think this was the point that I did all that work and I noticed that I only came away with $45. I should have took my earnings when I had it, and you can see me counting my number of trades, and I thought I only did like 4, which it is 4 trades, but it was, I did more than one position in each one of them. So I end up looking at the next stock, which is ATHE, looked for a position, saw that it was running, and I put $1,000 position, a big position. I'm sorry, I put 1,000 share position, which is a big position, which is where I made the biggest mistake. Overly aggressive, trying to make it the last trade of the day, thinking that I can get out as soon as I need to, and I end up hitting the buy button. Got in this trade with 1,000 shares, noticed that it was consolidating, but even in the consolidation, I'm down 150. Then I'm up, then I'm down, then I'm up. I noticed that during the trade. But this one, I noticed that I doubled down, which I shouldn't have done. You can see that I put my hand over the buy button again, contemplating, should I add more? I end up hitting the buy button again, averaging it down to 486, thinking that it's gonna tip this trade over into a positive, which it didn't. Then I began to notice that the stock is a little extended. The previous bars on the 5-minute has been rising in agony. A lot of top and tails. And then on the 1-minute, it's not even the best bull flag pattern. That second bar definitely has a lot of indecision. So at this point, I am stuck in the trade, and it began to flash down. 3 minutes later, I noticed that my account has flashed down all the way, and I'm just really hoping that it does a bounce move, and I am making sure that as long as it doesn't go below the second EMA, really the VWAP, I would hold on to it. I don't know why that thinking was there. I should have just cut it loose even there. I would have been happier with an $800 loss than a $1,400 loss on the day. So that's it on this trade. I can't bear to look at any more of it, but I eventually tapped out when I noticed that it wasn't going to resolve. And eventually I end up cutting it loose. So yes, that definitely cut it for the day for me, for sure. Maybe even for the week. I'm definitely going to have to regroup, do some more training, maybe do some more videos or something on some of the technology. But I really want to talk about the psychology behind trading. You can have all the tips and all the tools, but if you don't have that discipline to cut the trade off or to cut your day off when you see yourself spiraling down, you definitely should not be trading. So that's something that I am taking away from day trading. Day trading will pull out a lot of those emotions. Swing trading is pretty simple. You can walk away from it. You don't have to be emotionally tied to it. You can come to it and you know you have your stop loss automatically set. But this is a different ball game. This is something where you have to know when to pull back and just walk away and call it a day. So hindsight, looking at it, I'm gonna look at the footage some more. It's good to really record your trade so that you can become a better trader by seeing some of the pitfalls that you can put yourself in. Definitely did not see that coming. Been doing simulated training, trading for some months now, but it will not give you that emotional bond that you're gonna have with that live environment. And also you got to be willing to be wrong. If you can't accept that you're not in the right part of the trade, you just got to cut it loose and be a little more risk adverse. So that is my definitely video for the day. Let me know what you all think that a trader can do once they have the biggest loss that they've had. How could they rebound? Give me some positive feedback on what I can do to become a better trader. This is a new channel. For more tips and tricks on trading technology, hit the like button and go to TradeSmith.io.